When you take a trade, do you know precisely what context you're in? In other words, what is the market structure like? What are the intentions of the smart money? Pay attention. Responding to these kinds of questions can greatly enhance your chances of success as a trader, maybe even completely turn things around for you. Today, you're going to see what the smart money sees on screens, on trading charts. In a few minutes, you'll know how to avoid a whole bunch of traps set by the big bucks, because you'll be able to see and read the SMC market structure. You up for it? We're out of here. Let us delve directly into the market structure of smart money. It is a slightly different way of analyzing the markets, but it will enable you to filter out a lot of possibly missing elements in your strategy, perhaps even to make your approach more qualitative. Let us have a conversation about the definition of market structure. What precisely is market structure? It is a scheme that we will be able to draw and put into practice on our charts. It's a blueprint that's going to translate the market's current behavior and, more importantly, the market's likely intentions too. These intentions are, of course, what will translate into the actions of market players, but especially of big capital, because here we are talking about a trend and a reading of SMC structure. That is the reason why it is so interesting. It is evidently going to enable us to analyze the trend with a structure that will simply be bullish or bearish in nature. Bullish structure, bearish structure, those are two things the market can do, but let's not forget about the consolidation phase and especially the range. That's the third element right here, who translate what the market can do. We also know that most of the time the market is in a range. I will show you in this video how we will integrate this consolidation into an SMC structure in the end, and you will understand everything in just a few moments. But right before that, people often ask me which structure really matters. It's like when you look at the trend, which chart you have to look at the trend, etc. You can look at the market structure on any chart, any time frame, any movement unit, it doesn't matter. We have this structural phenomenon that is linked to this market. The general rule remains the same. The more you study this phenomenon, this structure, this trend reading in SMC version, the more you will be able to have a relevant reading on large time units, since the market players of smart money also intervene much more on large time units. And that aligns with the concept of multi-time frame analysis, which we can discuss in an upcoming video. How do you identify the SMC structure? We're going to start with the basic concept and Dow's theory. This Dow theory is really cool. This approach has been around since forever. I made a video about it on my YouTube channel a few years ago. I'll slip it into the video description or link it here on the image. The water theory is a basic concept that allows you to read market trends directly from the price. We're going to start from this concept for the SMC structure, since it's part of this SMC structure, you'll see. And the water theory, I remind you, what is it? It's the formation and creation, and also the respect of a formation of higher and higher peaks and troughs for an uptrend, or according to the formation of lower and lower peaks and troughs for a downtrend. So this concept is directly integrated into the structure in reading the SMC trend. Is there really a difference between the water theory and the SMC? At least the version of this structure, of this SMC trend. Yeah, there's a difference, because ultimately, when discussing water theory, we're primarily referring to a main structure. That can be the major structure, the minor structure, that is another topic. But here, for example, the difference that prevails for me, and that is my opinion anyway, between the structure and the trend according to the water theory and according to the smart money concept, is also this differentiation between minor and major structures. You'll see, we'll have concrete examples soon. In the main structure, it's simple. We have peaks, we have lows. Stay tuned for more details. In the minor structure, we have minor peaks and minor troughs. Nothing extraordinary here, but you'll see that when it comes to putting it into practice on the charts, it all makes sense. So how do you use the SMC structure? It's simple, it serves as our main directional ticket, but it's also inevitably going to be a quality criterion. If you follow this structure and the general directional ticket used by big money, the smart money concept, you should typically have more high quality trades. And maybe less in quantity, but when it comes to quantity versus quality, we clearly see a significantly higher profitability if we make this choice. So, very important, that's why we're discussing it in this video, and it will lead to many buying and selling opportunities based on the context. So here's how we're mainly going to use the SMC structure. It's clearly a filter that will allow you to be normally most of the time in the tickets of movements more widely present and to come, especially in the financial markets. It's time to jump right into the examples on the platform. Here we are directly on the TradingView platform. I'm going to show you some theoretical examples here, and then we'll move on to some real-life examples. So right off the bat, we have a diagram that I've also prepared for you here to see how we're going to have a market evolution, a structural analysis that's going to be different, for example, from the water theory. The theory of water, for example, let me give you a first example. So we have a dip here, we have a peak over there, then we have the formation of another dip. This dip is currently even higher than the previous dip. But here, look, we have the formation of a lower peak than the previous peak, and there we break the previous low to form an even lower low. So here we have lower and lower peaks, lower and lower troughs. We have a theory of water that's starting to go down in the end, right here, plain and simple. So this is the water theory, and we keep on having lower peaks, a trough that's also getting lower, but then the market turns around directly, it breaks all that, and we start again with an upward trend where, yes, we can talk again about a simple and clear water theory. Since the peak is higher than the previous one, clearly we see it, we broke it here. The next trough is also higher than the following one, so it's definitely an upward trend with ongoing peaks. But on the other hand, you see that later, same thing, we have this new peak, we have this dip here, this peak is lower than the previous peak, we break the dip, and as a result we move to lower peaks, dips, but the market keeps rising. You see, this is the basic water theory. I invite you, of course, to watch the complete video once again, which is in the video description. I'll put the link in the first few lines. And now we're going to see this differentiation with the reading really of the SMC trend, but for as much as keeps and takes back in the end somewhere this concept of theory. Allow me to provide an explanation right away. We start from this low point here, we establish this peak over there. According to this approach here, literally what is going to happen from now on between this established low here, this peak over there, we are going to do it more like this. You know, this peak here will ultimately be about seeking a favorable price, simply put, and also about market traps to be able to take advantage of the counterpart and to be able to push harder as well, without a doubt. So here, unlike the water theory, from the moment we break this low, we don't start on a downward movement. According to the SMC analysis, we're going to stick with a one-way ticket throughout this whole period. We are simply going to be waiting to find some favorable things, such as perhaps having an imbalance zone in this area, or even having an order block that gets touched in order to continue moving upward. So you see here already a big difference with the theory of water, even if we keep the concept, because you will see in the end, when we break this summit here for the SMC trend, we will have a trough and a summit that will form. And naturally we have the retracement coming here, but the SMC trend will truly enable us to clean up market movements within significant impulse waves like this one, or even this one, where a plethora of things can happen inside, but what occurs inside is primarily the search for liquidity and areas of interest to better continue this trend in a more effective and efficient manner for optimal trading outcomes. So clear differentiation, I think, here for everyone now between the water theory and the SMC trend. So this SMC trend once again goes through a low and a peak, and everything that happens inside doesn't change its directional bias. As long as we do not actually break this low here like that, we will adhere to a bullish bias as long as we are on a formation of major peaks and higher lows without deviating from this approach. So we continue here, you see then we make a retracement very well here. There for the matter, it's a clean and clear retracement, yes it happens too, and then we have the formation of the top since we break the previous top, and then we correct by correcting twice to make a bottom and break the top, continue the bullish trend. So here the reference peaks, or I should say reference peaks and troughs, are present here, SMC version. So that is where we are also going to make the differentiation. I am actually going to change color for that. Right away, I am going to switch the internal structure to red. Now, this is the outer structure, major peaks and valleys. Internal structure, minor peaks and troughs, you can imagine. That's what we have here and there, just like that. So this is the minor structure in red. In green, it's the major structure. We actually stay really focused on the directional bias of the major structure according to the water theory, but it's a water theory SMC version that's going to clean up a lot of things. I've prepared another chart for a bearish SMC structure, for a bearish SMC trend with some reference points as well. We start from this starting point here, let's call it the first peak, a first dip, a peak here lower than the previous peak. We continue with a dip lower than the previous dip, and between this peak and this dip, everything that will happen will not change the directional bias of the SMC trend. Clearly here, unlike the water theory, we could say to ourselves, hey, watch out, we start, for example, here to break, so we have hollows that are equal, maybe slightly higher than the other, etc. How about we go for an upward trend? Nope. Here, SMC version, everything that happens between this reference peak and this reference trough will remain for a bearish directional ticket, and what will happen inside here will only be a search for liquidity or points of interest in order to go further, lower, continue the trend, the formation of troughs and peaks that are increasingly lower. Right here we have this point right here, the ultimate peak, the break, the low. In the end we're going to take this reference peak and continue breaking down in the downward SMC trend here. I wanted to additionally outline for you here the formation of consolidation and range. For that we are obviously going to also review the example with the little structure here, so the internal structure. Just a reminder, anything in green is an external structure. Internal structure, that's what we have here, for example. What will translate precisely into range, and here we also have some peaks, internal hollows present here. So by the way, range here, I tell you very often, I talk to you about it every morning in the session, in the Admirals morning show, in the live trading and scalping session from 8:30 to 10 o'clock. Here we have the formation of a G-range here, and in a predominant trend, that is to say, according to the SMC structure and trend, we are going down. So range is established clearly between this reference peak and this reference trough, so we want to stay rather bearish. And in the end, we also have a liquidity grab, which can simply be translated here as the break of a triple top that ultimately represents the upper bound of the range zone to come and fetch liquidity, maybe even come and fetch an order block or an imbalance zone and better exit at the bottom. We're going straight into examples now. On the order, here's the euro-dollar hourly chart. We're going to study how to read this SMC structure. We are going to rapidly commence from that point then, perhaps to increase speed. Thus, we possess a reference summit at this location. We're descending, so we disrupt the prior structure. If we start here, we disrupt, descend. Where do we actually have the first 6 retracements? We'll have first retracement in relation to this low point, where we retrace, as you can see, we come up to here, continue since we break previous low, finally new low, lower than previous low, so we follow theory of SMC overshoot. What does that mean? That means that, for example, in this case, what occurs between the reference peak here and the reference trough is only the search for liquidity, only the search for higher points of interest, in deep retracements as well to keep up the decline. The decline continues, and you can see it inside. We're going back a little bit like that, meaning that if I establish you, as I did earlier in the theoretical examples, the internal structure. Observe the internal structure, summit here, dip around here, then another peak, followed by a dip, and then another peak like that. You know, it's quite tricky. So you see here, we have a lot of respect for this dip, but then we experience a small bounce like this, and only after that do we actually start to go down in the direction of searching for this previous dip. So that's the inner structure. But truly what's happening between this reference hollow, this reference peak, is the desire, for example here, to go back to areas of structure. Let's examine it from a different perspective, because in this case you'll see we also have an order block. We have an order block, we have an imbalance zone in front, we return to hit this zone. This area, this structure doesn't touch the order block. Currently we're coming to this area to discuss the imbalance and the order block area. For those interested in order blocks and imbalances, I'll include 2 tutorial videos in the video description on the YouTube channel for you to see and better understand these concepts. But then we came back. You see, for example, on this block order, in the end between this dip and this reference peak, we did quite a few things to trap everyone a little bit. We come back, we look for a point of interest to better go down, and then we continue with the touch of this low point here, of this dip actually, quite simply. If we continue a bit more with the structure, we will see our current position. The dip will truly start here for me. Then we will have a retracement at this point. We break the structure by closing below that level. We retrace, and thus here you can see we break slightly, indicating a persistent break in the structure. We continue with the theory of the back, but in the SMC version, on the downside, and we'll see how it goes afterwards, because look here, between this peak and this trough, what's happening? Many small things, but ultimately we manage to polish it. So later we hit a wall, and naturally we can switch gears. Now we have a new reference point, we have a low point, taking us higher between this peak and this trough. So for example, closing here, we have a tiny retracement here, where we could, well, it's a bit discretionary. According to the rules we also have in relation to this analysis, either shift this peak here, or establish a low over there. We can establish directly afterwards, now that we're here, on the development of this graph. Otherwise, in real time, we can shift it. Ultimately, we would rather wait for the significant break of this trough, which is a much more important trough than this last small trough necessarily, since this last small trough can simply serve as liquidity here. So we will also wait for more significant breaks. And there you see we start from scratch like this here, and there you see what's happening between this reference low, this reference peak. Now we're getting serious. We don't close above the high point of this summit. Now, we only come to hang out, so we come to pick up somewhere also the order block that is inside this wick. Here, we even trap it a little bit and manage to delay the drop even more after having had a big and very quick correction movement, a little bit of liquidity above here, a little bit of liquidity above that peak. I would even dare to say, my bad, much more liquidity above the reference peak that we just touched, and we go down stronger on the test of the trough. On the continuation of these examples, if we keep going a little to get to the current point, we make a lower dip, a peak here. We can't seem to get out of this slump. For now, we're still in between this peak and this low. Right now, as I'm speaking to you, we're really working on this summit here. And we'll see if with the occurrence we can start to surpass and get back on an upward trend on this happy example there. I hope you enjoyed these examples, learned a bunch of little things to distinguish the theory of water from the SMC trend, understood the importance of the SMC trend, and saw the market as the smart money sees it, because the smart money needs this liquidity, needs to revisit points of interest to trigger more significant scenarios in line with a broader trend on the chart you are looking at. I'm going to slide you some more links here that I talked about in this video, really important to fully grasp the smart money concept, its approach, and how to use the information left by the smart money to get ahead.